Hey everyone, Eric here. In this video, I'm going to teach you about how to build a marketing dashboard for growth meetings. By the end of this lesson, you'll understand how to think about attribution, how to break down your full funnel, and how to measure your overall efficiency as well as your growth. Okay, let's get started. In this lesson, we are going to be going through a dashboard that I would build, and I build a lot of these types of dashboards that kind of covers particularly a lot of marketing and also some finance content to understand where's your business at, sort of year to date, month to date, and then a lot of our metrics will be week over week. And we're going to be looking at all of the different experiments that we've been running on a weekly basis, tracking the results of them each week. We're going to be looking at the top of the funnel, the middle of the funnel, and the bottom of the funnel. So what do I mean by that? I just put this in here as a reminder. You probably already know what this is if you're watching this video, but top of the funnel is focused on awareness or introducing new potential customers to our brand, but that have never heard of us. Middle of the funnel is engaging with your audience. So if you're, a B2C company, that might be sending out emails or creating, social content. If you're a B2B company, that might be, trying to schedule a meeting, trying to show people your product, etc. And then bottom of the funnel is actually getting them to purchase. And so most of your investment usually goes into the top of the funnel because you need to advertise to tons of people before you can get usually one of them to start engaging back with you to become sort of get into the middle of the funnel. And then you're trying to move them all the way down your funnel. And so each thing that you do sort of hits different parts of the funnel. So we always want to think about this to make sure, we're not focusing too much on conversion, because if we don't have new users, then it doesn't matter, how dialed in our conversion campaigns are. We won't be able to convert that many people because there'll be no new people to convert. So you want to keep this in mind. And we're just going to be trying to figure out where did our performance increases and decreases come from. So usually at the top of my growth dashboards, I just create something really simple year to date. It doesn't have all the metrics in it, but it gives you just a really quick view of sort of like what has happened over the last few months and where are we at month to date. And so in this video, I'm saying that we're in June 2022 and we're partway through the month. There's 12 remaining days in the month. And so what I do is I just put spend goal and revenue goal. So for January, because a lot of this stuff you'll just forget about or you'll lose it, but it's good to put it into a dashboard. Spend goal 20K, revenue goal 60K, a rough percentage of revenue, and then our actual results. Month to date spend, we spent 15K. We had 41,000 in revenue. MTD stands for month to date. And then we spent 37% of revenue. So when you look back, you can see our spend targets and revenue targets moved up, and we were able to sort of more or less hit those targets. And then in June, we're midway through the month. We have a spend goal of $100,000, and that can go to, in our dashboard, we're spending it on mostly on paid advertising, but that could go to any marketing activity that you're putting money towards. Revenue goal 300,000, and so we're saying that we've only spent 40K, even though we're sort of around 2/3 of the way through the month, and we've gotten 165,000 in revenue, but we've only spent about 25% of our revenue on ads. So efficient, but we're a little behind. So now we want to dive into, diagnose exactly what's going on, understand what's going well, what's not going well. So after I build this high level view, generally I will build basically a month to date breakdown. So it's basically everything that's in here, but just broken into more metrics. And then once we go through this, we will go into all of the experiments that we ran over the last 7 days to understand, why are we seeing what we're seeing. So the first section I cover is revenue. Second section is really about new versus returning customers. So it's about, what's your sort of, what's your customer retention looking like. The third is about CAC and marketing spend and efficiency. And then the fourth, I like to include something around lead generation. So that's sort of like mid-funnel. How many people are we capturing their information? So goal, 300K in revenue, month to date 165. And so here I just create a tab that I call remaining. So that means like how much is left to hit the goal. So I say 300 minus 165 and remaining days. So we're saying that we have 12 days left in June as of the day we're having this meeting. Usually you have these meetings once a week. And so in order to hit our goal, we need to do $11,168 of revenue per day in order to hit the 3,000. So, when you're tracking your daily revenue, this gives you a sense of, is this doable? Then I look at orders, and I just divide the revenue by total orders to figure out your average order value, which we call the AOV. And so we're saying that our goal is 142, and month to date, our AOV is a little lower. Now that could be because maybe we're running a discount, which we are when we're about to jump into that. Or it could also be that our product mix has changed and we're selling more of a product that has a lower price. So you want to make sure that you're understanding this data, and if it's changing, that you are adapting your strategy accordingly. Next, I look at customers. And you'll notice that 2,113 orders were purchased in our goal by 1,761 customers. That's because most customers don't just order one thing. So it depends on the business, but most customers, sort of on average, not most, but generally, many customers will buy more than one item. So we're saying that on average, a customer buys about 1.2 items. So certain customers buy 2 or buy 3 of what we're selling. And we're saying that we're selling like a clothing item and that we're an e-commerce business. So we're B2C business in our example. So then you have the breakdown of your new customers and your returning customers. And so, you need to break this down to understand how is your prospecting going for marketing. And so we're saying that we targeted to have about 25% of our customers come as returners, and we're actually about 37%. That either means that our returners, we're driving really strong customer retention, or that our new customer numbers are low and the returners are just a higher percent because this number is too low. So we need to kind of dive into that as well. And so for the spend and efficiency section, I say our target was 100,000. Remaining, we have basically 60,000. So we have about $5,000 a day to spend to try to hit our monthly goal. And next, let's talk about CAC. CAC, I'll include more videos about CAC if this is a new concept for you, but this stands for customer acquisition cost. This is the marketing that you spend to get one new customer to buy for the very first time. So if it's a returning customer, generally you would ignore that because most of your marketing, the vast majority of it is trying to get new customers to buy for the first time. Once they buy once, your returning customers generally are just receiving an email. Maybe they're already using your product and they're just coming back because they like it. Generally, you're not spending much to drive recurring revenue. So you take all your marketing spend and you look at your new customers. And that's not new orders, that's new customers themselves. And the reason why this metric is sort of like the king of all metrics is because if you know how much you need to spend to get one new customer to buy, all you do is you look back at your historical numbers and you say, okay, once someone buys, how many additional times did they buy? And you look at the profit over a customer's entire lifetime. So if we're saying that according to our profitability metrics, $75 CAC is acceptable. So that's total spend divided by total new customers. So that must mean that a customer drives more than $75 over their lifetime in terms of what we expect. And so we can spend $75 and we know that once they buy once and maybe they buy a second time, that we will be profitable on our relationship with that customer. So you need to understand that as well. It's called your unit economics. I'll include another video to that. You need to break down your unit economics to understand what is your CAC target. So one other thing is some people do include returners as well in their sort of CAC. So they'll look at total customers. I don't recommend doing this because it distorts the number. It makes it look lower. And so that's why I highlighted blended CAC new, which is really the most important metric. And then I looked at ad spend as percentage of revenue, 33. We've currently spent 25. Our CAC is lower than target, so that means we are acquiring customers very efficiently so far. And blended means it's all channels lumped together. And so, breaking out the performance by channel is sort of like another level of analysis that you can do. So the last section is just about, leads that we've generated. So we have Instagram followers gained. Our target was 6,000. We've gotten about 3,000. Only 12 days left in the month, so we're probably missing our target. Email subscribers gained. It looks like in this case, we're actually probably going to beat our target. And then YouTube subscribers gained. Looks like we're missing our target here. So now let's go through the experiments and understand sort of why are we seeing low revenue, high retention, weak Instagram subscribers, strong email subscribers. So here's what I like to do. I like to call out every single experiment and then the results that we expect from that experiment, and then the actual results, and sort of just, understand what worked, what didn't work. Let's do more of what worked, and everything that's not working, let's just cancel it and come up with some new ideas. And so if you do this every week, you'll basically accumulate and a lot of takeaways, and you'll move through a lot of ideas, and it'll allow you to iterate very quickly on your growth. I'm just going to kind of basically label each experiment where it's hitting in the funnel. You don't need to do this, but just to kind of show that, you want to be working different parts of the funnel with different sort of experiments at any given time. So the first experiment is that we increased our spend on Facebook ads by 50%, and we created a 20% discount, like a summer sale, and we had that copy on the ad, so that was trying to kind of increase the conversion on the ads and also get more distribution. So this is probably top of funnel for people. If we're serving ads to new people who don't know about our brand, that's top of the funnel. But the discount is also focused on conversions. That's also kind of bottom of the funnel. So if we're serving this to people who have interacted with our social accounts or have been to our website, or have bought prior, it's focused on the sort of full funnel. So this is, we're expecting here a conversion rate lift of about 50%. Let's say that we don't run many discounts. So when we run a discount, we see a big lift in conversion and then an increase in traffic on the Facebook ads by 50%. So let's figure out what the actual results were. So we have a few different things we can look at here. So we have this section, which is a traffic breakdown by channel. This is the data that you would get out of Google Analytics. Then we have a lead generation area where we kind of go into some of this data here. We have a new versus returning sales breakdown, conversion rate breakdown, and then we have a paid ads breakdown. So let's look at this here. So if we ran this discount on the Facebook ads, we want to see that we increased traffic by 50%. In this area here, you can see this is prior 7 days, and I included, let's just say that this business has only 6 traffic sources. Probably would have more, but just to keep things relatively straightforward. And so paid ads, Facebook, if we look here, we see that our users we have over the last 7 days, and this is the prior 7 days. So overall, the users from Facebook and the sessions were up. You can also see that our bounce rate was steady, and that's the percentage of people that basically go to the website and just leave. Pages per session, steady. Average session duration, about 45 seconds. But the CVR, as we said, is the conversion rate. Conversion rate was 0.4% in the prior 7 days, and now it went to 1%. So that's actually a very, very big increase in the conversion rate. And then if you look at, in terms of how many sessions did we have week over week, or maybe how many users, you can see that our users, I wrote a little formula here, that's just a VLOOKUP. Users were up 29% week over week. And our revenue, you can see, was 14K versus 7,800. Our revenue is up 86% week over week. And one thing I want to say is that this is Google Analytics, so this means that this data is last click. So this is just where did the user come from directly to our website. So this means that they basically clicked the Facebook ad and that drove them directly to the website. Generally, now that we've lost the ability to track users, there are a lot more users who see the ads, but then they come through different channels. So you don't capture the full, what we call attribution, just understanding last click. But right now, a lot of the time, it's kind of the best that we have. And so if we see an 86% increase in last click revenue, I think we can tell that this, boost in spend in combination with this discount drove our revenue up quite a bit. So, okay, so we can see that there was an 80% actual results, 80%, 86% increase in Facebook revenue. What was the user increase? 29% increase in users. And then what was the conversion rate increase? So 1% divided by 0.4%, that would be minus 1. 120% increase in the conversion rate. So I think we can put that first. 120% increase in CVR. So overall, compared to what we expected like a 50% lift in conversion rate. We got an even better performance. So I would say overall strong performance. So we know that this experiment went better than we sort of expected it to. Okay, let's move to the next experiment now. So we tried a big influencer sponsored post on Instagram. So we paid an influencer, let's say, some amount of money to promote our product, do an unboxing or wear it, et cetera, et cetera. And so this is really kind of a top of funnel activity. We're trying to get new people, to know who our brand is and to start following us. So we expect an additional 2,500 users driven to the website and an additional 1,000 subs. So first off, we can go to our organic Instagram traffic direct to our website, which is here, Instagram referral. And week over week, you can actually see we expected 2,500 additional users driven to the website, sort of on top of our baseline of organic traffic. And so if 2 weeks ago we had 2,500, we would have expected sort of like 2,500 plus another 2,500, so like 5,000 people to come to the website. And actually our referral traffic was down week over week. It was down 37%. So it did not drive additional people to the website. It appears that it didn't. And we also expected an additional 1,000 Instagram subscribers. So if we look at our new Instagram followers, sorry, I'll change that number to followers, although it's, same idea. You can see that our Instagram followers actually week over week were down. So not down, but we 2 weeks ago we got 1,200 new followers in a week, and then over the last 7 days we only got 1,000. So again, we didn't see that incremental lift. So it seems like this post had no impact, and so we can include, I think overall performance is weak. So I think we can make that red and just say decline in, IG organic traffic, low new followers. So for this experiment, we wouldn't work with this influencer again. And so, we can move on to the next idea now. Next thing is tag a friend. So we ran some kind of a tag a friend deal. And if people tag their friends, they have the opportunity to receive a new free product. So it's like a giveaway. And so we did that on Instagram. So that really is a top of the funnel activity. It's not focused on conversion. It is focused on engagement. So you could even say top mid, but really the purpose of the whole thing is to get new people to be tagged to our account to see it, and then for them to follow us. So I would say it's really top of the funnel. And we expect to be have 300 people tag their friends, and to have 250 new followers sort of incrementally to our Instagram account. And so let's say we look at our account stats. I mean, I don't have the Instagram account stats in this dashboard, but if you look at it on that day, you say, okay, how many tags do we get? You look at the post, you look at how many people tag their friends in the comments. Let's say we only got 26 tags and a few new subs. We didn't see like some spike in subs that day. So overall performance on the sort of like tag a friend giveaway was weak. But if you're just giving away one free product, it probably wasn't very expensive to run that. So you probably don't lose money doing it, just sort of didn't work. So the next experiment we ran was enter your email. So there's a pop-up on the website, and we say, okay, enter your email to receive XYZ thing in a giveaway. And ultimately, the issue with like Facebook and a lot of these big social platforms is they don't actually let you own the customer data. So you basically have to keep relying on them to maintain your relationship with the customer. So they own the customer and you sort of rent the customer from them. And if your account goes down, gets blocked, has some violation, you lose all your customers unless you can actually own the emails of your customers. So this idea is to kind of get more sort of customer data and own the relationship. So it's like people who you're driving to the website from all of these platforms, try to capture your email so that you can have a direct relationship with them. And so we're saying that as a pop-up on the website, we're like, okay, we'll give you a, something that you really want, XYZ thing, and we expect 5% of our traffic coming to the website to basically put their email in. The issue with particularly a lot of e-commerce businesses is you don't really get anyone's email unless they buy. So if you can figure out a way for people to give you their email, it can really sort of grow your revenue and allow you to sort of like contact people directly. So this is a mid-funnel activity. You're trying to capture people as leads so that you can convert them later, but you already drove them to the website, so you already did your top of funnel before. So we expect to convert 5% of our traffic, 1,000 emails. And so let's take a look here at our email opt-in. And so we had about, over the last 7 days, about 19,500 people come to the website. New email subs. So prior 7 days was 650 emails, but the last 7 days was 1,275. So let's assume that sort of incremental increase in emails was about 625. And so that's actually about a 96% increase in new emails. And so it looks like this giveaway probably did work. And so if that's 625 divided by users prior 7 days, that's about a 3%, 2.8% conversion. I think we can say about 3% conversion. And so, what are these 625 emails right here? Those are just people who are buying. So we're getting their email when they buy to check out. So we're just trying to capture sort of additional emails so we can own that relationship. So we didn't convert 5% of the website traffic, but we did convert about 3%. So 3% email opt-in, 625 new emails, incremental. So like on top of people who purchased. And, if we think about 625 new emails, let's just kind of do the math on that. So potential future revenue is, and so let's say we look back at our email list and all of the revenue that we've generated from our email list, and a typical email is worth about $30 of revenue. So let's say $30 times 625 is, in terms of potential future revenue, 625 times 30, that's about $18,750, $18.7K. And so, those are people now that we can contact directly and try to convert in the future. And it seems like they generate a lot of revenue for us. So I would say that this is moderate or even pretty strong. I think we can say moderate, like we should definitely continue it. 5% is a pretty high conversion number. So overall, definitely some good performance growing the email list. So the next thing we did was we sent a back in stock email for a popular product that was out of stock. And so let's say that back in stock, this is obviously focused on conversion. So this is the bottom of the funnel. And let's say we got 49 sales for that one item in 24 hours. And typically each item on the website, let's say we only get 5 to 10 sales every 24 hours. So we do see a spike there, and we see strong repeat buyers. So that's great because we're driving additional revenue from customers we've already acquired. So overall, I would say this experiment, strong results. Didn't cost us anything to do it. All we just had to do was send out an email, drove a bunch of recurring revenue. Okay, another experiment that we ran was that we dropped a new video on YouTube with like a style guide. So, something to help people wear our product and figure out how to wear it. We sent it to the email list. This is really focused on sort of top and mid funnel. So we want to acquire new people on YouTube, and we also want to engage with our current users. And so that's more of a mid funnel activity. And so let's say we did this and only 31 new subscribers on YouTube. And so let's go look at the YouTube. So only 31 new subscribers. And the prior 7 days, we actually had 39. So it's actually down week over week, the subscribers. So, and let's say if we looked at the video, less than 300 views. And so this overall was a pretty unsuccessful experiment, especially if we invest a lot of time and money in this video and nobody's watching it. So we need to go back to the drawing board on how to grow the YouTube channel. Okay, and then finally, we did a summer sale, 20% off, and we just put that on the homepage of our website. So anyone coming in from any channel will probably, we hope, be converting at a higher rate. So a conversion rate lift across all channels. That's obviously bottom of the funnel. And down below, we have called out a section where we have revenue, new versus returning. So we'll jump into that here in a sec. But we have our conversion rate, last 7 days versus prior 7 days. And we can say that see that our conversion rate was 1.3% versus 1%. So about a 31% lift in conversion. Obviously, each channel is a little bit differently, and we can go into that here in a second. But we're seeing really strong numbers from returning customers. So did we see a conversion rate lift across all channels? It looks like yes. Strong lift across the board, especially, let's figure out especially what. So paid ads, Facebook. We saw a very strong lift here. Oops. So very strong lift here. What about direct? Direct was like, this is just people coming directly to the website, kind of flat. Google organic, big lift, 2.7 versus 1.9%. So this is people coming through Google. Instagram referral conversion rate was actually down. So that means maybe we got a lot of people coming to the website that weren't very high quality in terms of traffic quality. Google cost per click, we saw some lift here. And then we saw a big lift from email, 5.3% versus 2.1%. And so these are probably the three channels that performed the best, with this discount. So we saw a strong lift across the board, especially on paid, paid, Google organic, and email, and also returning customers. So let's kind of dive in a little bit to the returning customer data. And so that's down below. So for here, it's kind of interesting. Like you can see that our experiments at the top of the funnel, here, and here, actually week, and week. And the top of the funnel long term is the most important part of your business, because if you want to grow your business, you need to, be exposed to new customers. So a great week in terms of conversion, but probably not business growth. And so, one thing to take away is like we need to really go and figure out how do we grow top of funnel users. And then, everything around conversion was great. Mid funnel did okay. Here didn't do very well. So let's kind of go and think and look a little bit at the new versus returning revenue. And so we're saying that if you break down our revenue, so prior 7 days, so we can even look at this here. So last 7 days, it was 52K. Prior 7 days, it was, in fact, I think I'm just going to insert a row here. Just do this to make it look a little nicer in case you end up using this dashboard for yourself. So we can add this up. And so here we can see, total revenue was up 38% week over week, but new revenue was up only actually 11% week over week, and returning revenue was up 96% week over week. So it seems like this discount that we ran really reactivated customers who had purchased in the past, and they came back and they purchased again. And so that's why we know that this sort of what we did over the last 7 days, the biggest thing we had was a lift in terms of recurring revenue. Oh, and by the way, if you're finding this content valuable, please subscribe to my channel right now and like this video. Also, if you want me to teach you everything I know about finance for startups in a small group with personalized support from me, join the waitlist in the description below for a chance to join the next cohort of my training program, Finance for Startups. Okay, so the final thing that I want to cover is a little bit of a breakdown by channel, by paid channel. I'm not going to go too deep, but I'm going to try to help you start to interpret some of this stuff if you're looking at it right now. A lot of times there's an additional meeting just completely focused on paid ads. So I'm going to go through a couple of the most important metrics for Facebook and Google. And anywhere you're spending money, you should be trying to figure out what are the most important metrics that matter. And so for businesses like this, Facebook is always almost completely focused on top of funnel. You can basically reach very large audiences of people that don't know your business. You can also target people who have interacted with your business, but most of your spend is generally going towards what we call prospecting, which is acquiring new users. Google is generally focused on bottom of the funnel. So you're doing a lot of remarketing. So you're showing banner ads to people who added to cart or who've been to your website, or you are targeting people who are searching for something similar to your products. They're already looking to buy something like your product. So you can't grow your business very well with Google. Certain things like with YouTube, it's possible, but Facebook is more for growing your businesses and Google is more for sort of like converting your customers. Obviously, certain businesses can grow with search, like keyword search campaigns. So that's not like a, catch-all definition for each one. But for our business, that is sort of how it works. And so we're saying last 7 days, you have Facebook and you have Google. These are a couple of the metrics that you're going to want to track. So you have total spend, and you can see that we spent up on Facebook. And so I think we can even just show, week over week, one divided by the other. So Facebook, Google, and maybe we could just say week over week. Okay, so Facebook, Google. So link clicks, platform revenue, et cetera, et cetera, et cetera. Okay, so let's look at this. So we said we spent up 50% on Facebook week over week. Impressions, these are the number of people that we actually showed our ads to. And the CPM is it's called the cost per mil, and it just means how much did you pay on average to show an ad to 1,000 people. So a CPM of $21 is, it's a CPM, the type of CPM you see. Sometimes CPMs are much higher than this number, but we're saying that we paid $21 to show our ads every 1,000 times on Facebook. And so if we had 9,305 link clicks, meaning people that actually clicked the button on our ad, shop now or learn more or whatever the button is, that means that 1.3% of people who saw the ads clicked them. And that's our CTR, which is the click-through rate. So 1.3% click-through rate. And that means that we paid $15,000 for 9,000 clicks. And so our cost per click, which is the CPC, is 1.62. Generally on Facebook, if your performance is changing a lot, for better or for worse, you'll either see a big swing in the CPM, a big swing in the click-through rate, or a big swing in your conversion rate here. So when you're trying to diagnose performance on one specific channel, especially a paid channel, go to those 3 metrics: cost per mil, click-through rate, conversion rate, and one of those, if not multiple, will have changed. So the confusing thing is after iOS 14 happened in 2021, Facebook basically can't see very many conversions anymore. So they're reporting things that are basically modeled conversions. A lot of their conversions are now just made up. And it's very, very hard. The data from the platform, once people leave the Facebook platform and they go onto your website, it's very unreliable because Facebook a lot of times can't see what that person does. And so they're just kind of modeling and making up numbers. And so you'll see the platform rev might say 28,000 of revenue, and the ROAS is the revenue divided by the spend. It's called return on ad spend. They might say 1.9. But when you look on a last click basis, meaning if you look in Google Analytics, you're going to see very different numbers. So we're saying that we saw 14,000. And so on a last click basis, people that clicked an ad directly came straight to the website we're saying our last click ROAS was 1. Of course, that's missing all the people that saw our ad or clicked on our ad, but then they left, and then they came back through an email, or they came through Google, or they came through some other channel. So we've lost the ability to really get a full attribution, or people who, saw an ad a week ago and then came back today. We've lost the ability to track all these people. So it's good to just kind of look at both now and see, the true reality is higher than this number. And, it might be around this number. It could be lower, it could be higher, and just compare them to see how synced up they are. And so, you know, what we're really trying to do is compare it week over week. So with Google, you have basically all the same metrics, although with Google, you're focused more on remarketing. So you should see a much higher amount of revenue because you're targeting people who are already interested in the brand. And so total spend 3,000, CPM $14, cost per click $4, and then revenue out of Google's platform would maybe be a 5.6, and then last click revenue we're saying is a 2.8 ROAS. And so you see these numbers, you compare it week over week, and we're basically saying that we see a big lift in spend, we see a big lift in link clicks, meaning people who clicked on our Facebook ads. The platform data is kind of unreliable, but on the last click basis, we saw a really big lift on Facebook, and then also a pretty big lift on Google, probably because once you drive these people to the website, especially if they're already interested in the business, then they're more likely to convert. And so this is just sort of like a mini paid dashboard to get you started on trying to break down some of this paid data. Okay, so that is everything I'm going to cover for this video. I hope this gives you some perspective on how to track growth and attribute your performance to different marketing activities, and also how to build a great marketing dashboard. By the way, if you want me to teach you everything I know about finance for startups in a small group with personalized support from me, join the waitlist in the description below for a chance to join the next cohort of my training program, Finance for Startups. As always, in the description below, you can download this marketing dashboard completely for free. And if you found this content valuable, please like and subscribe. Only 10% of the people that watch my channel are actually subscribed to it. Thanks for watching, and I'll see you in the next video.